Hey everybody, welcome back. Sive is here with the forexpeacearmy.com. Let's take a look at euro currency. So the two topics to discuss today. The first is our weekly report as usual, and second, the trading plan for the beginning of the week. Concerning the weekly report, I think that we have prepared extremely interesting report where we have considered the fresh narrative that is currently actively pumping through the media. That's where I go into the stagflation. It will be a new spin-up of inflation and central banks will start raising rates and so on. Meantime, which is very difficult to explain, the probability on poly market for recession in the United States is around 70%. So you should choose the one thing. Either you're getting inflation and economy overheating, or you're getting the actually recession. And here's where the nuances stand. Its opinion suggests that currently the narrative of the inflationary spin-up that actively is pushing for the media and which is actually trying to force people to believe that this definitely will happen. It's my work in favor of the big whales. They're trying to actually buy out the current drop on the market where currently actually households, individuals are selling just because they are frightened. Everybody talks about inflation, it's time to sell. While the big companies might accumulate positions. And then when the real rate cut will follow, markets start jumping up. And actually those who appeared on the side start entering the market when the big whales will start selling before everything will collapse. So it might be the midterm trap which could get the progress within a few maybe months, somewhere before the November elections. And we have talked about this in detail, explaining nuances, how it will be and why it might happen. Of course, it's not guaranteed, but currently it seems very probable that it might happen. So, as a conclusion, we have made in the report what it could mean for euro currency, how it could perform. If you would like to, you could read. So, returning back to our technical background, we now is getting the thing that we talked about last week. If you remember, I mentioned the possible bullish grabber on the monthly chart. And since we're coming to the end of the March, it's just about slightly more than a week left, so we could get it. And this pattern, actually possible euro appreciation, stands precisely in a row with the scenarios that we suggested in the weekly report. That obviously the scare of the inflation in Europe will be higher, just because they are more dependent on the crude oil, and probably and already actually the rhetoric of the European Central Bank, of the Bank of England, significantly more hawkish than the rhetoric of the Fed. So, and that confirms what really we could get. At the same time, if you take a look at analysis of the high time frames on the monthly weekly, you will see that possible upward action that we could get in the euro currency will be midterm, not really. This is new, not the new long-term trend. And it absolutely doesn't break the scenario with a possible downside reversal. It just tells that the shape of the market might be a bit different. So it might be a different pattern to form. This is first moment. Second moment, it's not the fact yet that we will get this grabber. So we still have the time. We need to check this. But potential of this pattern is really thrilling. So it might be really great. Now, speaking about the very short-term perspective, I think that, well, actually, I wouldn't change anything. In the current situation, I just keep going with the plan that we already have. It behaves really perfect, and I do not see any necessity to change it. First of all, I would consider this downside action as a good thrusting action. Unfortunately, we can't treat it in bread and butter, mostly by two things. First of all, it is not as smooth as it should be, because we have some choppy retracement, which is not good for a thrusting action. Despite that, we have from time to time downside acceleration and sporadic sell-offs. You can see. So I wouldn't treat it as in terms of the Giordanopoly, but at the same time, I think that overall momentum here is really significant. This first reason. Second reason, by the Giordanopoly terms, here it was already a 618 retracement, which could get out the majority of the steam out of the pot. So by his terms, and here I would consider a retracement, but that will be confirmed on some performance on lower time frames. But at the same time, I'm not excluding the situation where we still get some deep retracement here. This is first moment. Second moment, appearing of this pattern is perfectly fits the idea of the grabber. So just imagine so that if we will get the monthly grabber, what might be best fits to this pattern, then possible reverse head and shoulders on a daily chart. That's actually could become the foundation of the grabber and could start triggering the upward performance. That's why the appearing of the hand shoulders, that's another reason why I think that here might be the pullback and why this momentum is still not played out. So, and currently on the intraday charts, I would keep an eye on the possible bearish patterns around resistance levels. Now we stand around 116, but in the current moment, if you take a look at the 4 time frame chart, as we said on Friday, this is mostly momentum after European Central Bank meeting. And we said, take a look, here maybe my small retracement, and then we could go to the XOP by many reasons. Acceleration, tight consolidation here, it's just moving to the XOP. Besides, market already stands inside of the new trading range. So actually it's not quite new, but returns back in this range. So first it dropped out of it, resistance, drop, breakout, support, and pullback. So currently market stands in this trading range, which is actually open the way up to its upper border around 1670. So that's what we actually initially planned. We said keep an eye on the XOP 11670, might be interesting area to take the short-term bearish position by 2 reasons. First of all, because this is good resistance and agreement area. Second, because this will be the neckline of our potential hand and shoulders, and we could get the pullback at least to 115.30 if hand shoulders will hold, but if it will fail, we could get even deeper retracement. We do not know what will happen in the Iranian conflict. It might be any surprises, so we can't exclude any scenario. That's why we consider taking short position around this area is attractive. So that's our trading plan for current situation. Speaking about Monday, Tuesday, as we said about long position here for a possible XOP, you could just try to do this if you trade on so small time frames, because on an hourly chart here is actually I use in 30 minutes, but it doesn't matter. So in fact here we've got the ABCD pattern that we suggested right to the 30% support. If you take in position here, that's great. If not, then and you think about taking long position, that's your vision on the current situation. Take a look, here's might be the kind of the reverse head and shoulders. So you could wait for some minor pullback here to consider position taking against these lows. So that's the setup that we have currently for very short-term trading. So you can see situation on your currency looks actually very interesting. A lot of patterns to watch for, as a big and a small one. So I think that week is promised to be really interesting.